Imagine this. 10 years from now, you're living your dream life. A beautiful home, financial freedom, traveling whenever you want, and no longer stressing over bills. Sounds incredible, right? Now ask yourself this. What are you doing today to make that dream a reality? Here's the hard truth. If you're not learning how to make your money grow, you're already falling behind. But don't worry, because today we're about to change that. Welcome to the ultimate guide on stock market basics. By the end of this video, you'll not only understand how the stock market works, but you'll also know the 3 essential principles that separate the winners from the losers. Stay with me, because the difference between knowing this and not knowing it could mean years of regret or years of wealth. Now, I know what you're thinking. The stock market, isn't that just for rich people or those math geniuses on Wall Street? Spoiler alert, it's not. In fact, most millionaires started right where you are now, completely clueless but ready to learn. So let's demystify this together. But before we dive into the 3 things you need to know, let's address the elephant in the room: fear. Most people avoid the stock market because they're afraid of losing money. And that fear, it's what keeps them broke. So, let's talk about why that fear exists and how you can overcome it. Segment 1. What is the stock market? The stock market isn't some mysterious entity. At its core, it's just a place where people buy and sell ownership in companies. When you buy a share of stock, you own a small piece of a business, and as that business grows, so does the value of your investment. Think of it this way. Imagine buying a coffee shop with your friends. You all invest some money, and as the coffee shop becomes more successful, your share becomes more valuable. That's the stock market in a nutshell. But here's where it gets tricky. Not all businesses grow, and the wrong investments can leave you broke. So how do you avoid falling into the traps that 90% of new investors make? Let's move to the first principle. Segment 2, Principle 1, Start early, think long term. Here's the first and most important truth about investing. Time is your greatest asset. Let me put this into perspective. If you invest $1,000 at age 20 and it grows at an average of 8% a year, by the time you're 60, it'll be worth over $21,000. Now imagine you wait until you're 30 to start. That same $1,000 will only grow to about $10,000. The difference? A decade of missed opportunity. The earlier you start, the more time your money has to grow. Don't fall into the trap of thinking, I'll start next year. That's how people wake up at 40, wondering where all the time went. Now, if you're thinking, but I don't have $1,000 lying around, relax. You don't need to be rich to start investing. Some platforms let you start with as little as $10. That's less than the cost of 2 fancy coffees. So maybe skip the lattes? Starting early is powerful, but it's only half the battle. The second principle is what will keep you from making costly mistakes. Segment 3, Principle 2, Diversify and don't chase trends. Here's a question for you. If you were playing a game, would you bet everything on one roll of the dice? Of course not. So why do so many people put all their money into one stock or chase the latest trends? The second principle of smart investing is diversification. This means spreading your money across different types of investments: stocks, bonds, real estate, or even index funds. Why? Because when one area of the market goes down, others may go up. Chasing trends, like that one stock your cousin swears is the next Amazon, is a surefire way to lose money. Remember, slow and steady wins the race. But diversification alone won't make you rich. To truly succeed, you need to understand the third and final principle. And trust me, it's a game changer. Segment 4, Principle 3, Emotional discipline. Let's talk about emotions. Fear and greed are the biggest reasons people lose money in the stock market. When the market crashes, people panic and sell. When stocks soar, they buy at the peak out of greed. Both are recipes for disaster. The third principle is emotional discipline. This means sticking to your plan, even when it's hard. If you invest for the long term, short-term market swings won't matter. Focus on the bigger picture and don't let headlines dictate your decisions. Think of it like dating. Would you end a great relationship because of one bad argument? Of course not. The stock market works the same way. Don't let short-term drama ruin long-term potential. So let's recap the 3 things you need to know before you invest. 1. Start early and think long-term. 2. Diversify your investments and avoid chasing trends. 3. Master emotional discipline and stick to your plan. These principles may sound simple, but they're the foundation of wealth building. The earlier you understand them, the faster you'll escape the rat race and start living life on your terms. But here's the thing. Knowing these principles isn't enough. The real question is, will you take action? Because every day you wait is a missed opportunity. In our next video, I'll show you how to pick your first stock and avoid beginner mistakes. Hit subscribe, because trust me, you don't want to miss what's coming next. Your future self is counting on you. Start now, stay consistent, and let your money work for you. Thanks for watching, and I'll see you in the next video.